Hey everyone, welcome to the show. My name is Sam Shaw and I'm the founder of Wall Street Mastermind. This is Wall Street Mastermind's Elevate program, where we take our flagship coaching program and give it away for free to high potential students who are currently in a difficult financial situation. The goal of this show is to first and foremost give these students the coaching and guidance that they wouldn't be able to get otherwise and help them break into investment banking. Of course, we also want to give all of you an in-depth look at how to go about your own investment banking preparation process the right way, so that you can model it after the same proven methodology and strategies that we've used to place over 90% of our students into investment banking across every single bulge bracket and elite boutique bank over the last several years. With hundreds of thousands of applicants competing to break into investment banking globally each year, our team only has the bandwidth to help a very small percentage of you. So my hope is that this show helps all of you, even if you aren't able to directly participate in our program and work with us. So let's get to it. In this session, we go through Ximena's answers for all the market-related questions that typically come up in investment banking interviews. For example, questions around macroeconomic or industry trends that you've been following, an investment banking deal that you find interesting, and stock pitch questions. All of these questions require you to diligently follow the markets and also come prepared with intelligent commentary about what's happening in the world.
Sam Shaw here, founder of Wall Street Mastermind. We're back today with another session with Ximena, and we are going to be doing the last part of her behavioral questionnaire today, where basically we're going to be going over the market-related questions. So let me just pull up the document here on the screen. Here we go. All right. Can you see that?
Yeah.
Okay. All right. So basically, for behavioral interviews, just so people have context, they're sometimes going to ask you market-related questions like talking about a specific industry trend, talking about something that's happening in the economy, talking about a certain deal that you've been following, and then like pitching stocks. And so these are all, I kind of lump them all into the same category. So they're not like the most common questions, I would say, but they do come up. And a lot of times people do a poor job at it. So let's just make sure that that doesn't happen to you. So let's go through, let's see what you got here. So, okay, tell me about something that's been happening in the markets and its impact on the economy. Okay, so an important current event is inflation. This will have an effect in many industries, one being M&A deal valuations. Okay. Ever since the pandemic, interest rates were set extremely low to help prevent a recession and encourage customer consumption. As the pandemic ends and the economy recovers, prices are starting to surge. As valuations are based on the future profits business are expected to generate, unforeseen inflation may reduce the real value of the future dollars taken in. Both buyers and sellers need to be wary as deal financing becomes more subjective. Buyers may either not offer as big of a deal in reluctance to what its actual value will be going forward. Sellers may also feel pressure to show that their rate of profit growth will outpace inflation. Based on the industry, companies may have skepticism and be stricter of their valuation standards going forward and finance their deals differently until inflation seems to level down. And many deals may be structured with more equity and reduced debt funding to stay away from increasing interest rates. Okay. Was this based on like your research, or how did you come up with this?
Well, both. I think, I did some research. Well, I wanted to, I don't know, from the video I watched, like I wanted to relate it to M&A just because it was like what I talk about in my other questions. And then some of it was like background, just econ knowledge.
Got it. So like, for example, this section is based on your research
More
or
subjective.
sorry?
Both buyers. So the who cares, I found from an article.
Okay.
We're going, and then the last part was definitely like the last sentence. I was going to ask you about that. I don't know if that changes how deals may be structured with the debt.
So this is your conjecture?
Yeah.
Mm, yeah. Yeah, I think it's possible. Um, but I don't know. I mean, I think shying away from debt because of rising interest rates, that makes sense. Structured with more equity, I'm not sure it necessarily has to be equity. Like it could also be cash, right?
Yeah.
Like you just don't want to use,
Okay.
because it's either cash debt or equity, but we're just saying less debt, but it could be
Okay.
more of the either of the other two, right? But I would say, yeah, I mean, inflation is definitely, a hot topic right now. So I think it's timely. It's having an effect in many industries. One being M&A deal. Like, I don't think M&A deal valuations is an industry, right? So,
Okay.
we probably want um, to rephrase this. What you're really doing is you're trying to tie inflation back to M&A.
Mm-hmm.
Um, so having an effect in many industries.
So like just like this can have an effect on M&A deal valuations.
Yeah. I mean, I'm just trying to think like if this is the most like if you're gonna talk about inflation, I feel like first of all, I understand why you're trying to tie it back to M&A valuations because it's a banking interview, but it doesn't like that's not the first thing that I would think of when I think about inflation.
Mm-hmm.
Like if I think about inflation, I would expect if I'm the interviewer and someone's going to talk about inflation, I would expect them to talk about more like its impact on the economy, right? So
Okay.
like what happens if like, prices keep going up? Like for example,
Okay.
it affects I mean really it affects I think it affects like the people who don't have as much money, right?
Mm-hmm.
Like the lower wage earners, their income's not increasing as quickly as the cost of all the goods that they have to buy. And so it actually hurts them the most. Like if
Mm-hmm.
you're already
Yeah.
rich, like it doesn't affect you that much because you can still afford everything, right?
Okay. Yeah.
And then I would probably talk about like what the Fed is doing
Mm-hmm. Yeah.
related to inflation. Like, like obviously they're watching inflation very closely. Um, initially I think they said that they believe the inflation right now is transitory. It's like
Mm-hmm.
a one-time event because, the pandemic, but then I think gradually they've been changing their tone and saying that they now expect it to last a little bit longer, right? I mean, you did
Mm-hmm.
kind of mention like interest rates and stuff like that, but like now the Fed is they're expected to start raising interest rates and they're starting to taper their bond purchases, right? And
Yeah.
so I would talk about stuff like that, and then like
Okay.
what happens if like the who cares and your opinion and stuff like that. I would be talking about like what happens if inflation doesn't go back down, right?
Yeah.
Right now it's like basically the highest it's been in a long time, and it's been
Mm-hmm.
multiple months in a row. So I would like cite some statistics, and then in terms of like your opinion, like you should give an opinion on what is going to happen going forward with inflation, right? Like, do
Okay.
you think that this is going to be more of a permanent thing, or do you think that the Fed's going to be able to kind of like rein it in, or like that's kind of the direction that I would.
That makes sense. No, for sure. I think it's just because in my head I've like ingrained like tie it back to banking, tie it back to banking. But I guess
Yeah.
so that's why like when I thought about like doing an overall economy kind of thing, but then I was like tie it back to banking. So I thought maybe M&A. But
Yeah, no,
it makes
and
more
yeah,
sense.
so I understand why you did it. I think in this case, like it's fine to not do that actually,
Yeah.
because
Okay.
what they're looking for with this question is like, do you understand how the economy works and how everything interplays
Mhm.
together, right? And
Yeah.
so you just have to demonstrate that. which
Okay.
I don't think this quite
Shows, yeah.
shows it, you know. So
Okay.
I will go back and redo that. Okay.
Okay.
All right, let's look at the next one. So talk to me about a trend that's been happening in the whatever industry you're interviewing for that you've been following. One of the leading industries driving M&A deals is the tech industry. They began their strong drive during the pandemic, leading deals worth over $671 billion. The tech industry accounted for nearly a quarter of all M&A deals in the first half of the year. Example, Microsoft and Nuance for $19.7 billion. The tech industry has so far also had the largest year-over-year growth of any sector at 51.5%. What is this like what overall revenue for the entire tech sector or
I
how
think so.
it seems
Does that look incorrect? It's from an article. But I have like, I can find the article because I have them all in a separate document, like cited.
okay. Yeah, I don't know. I mean, I'd be interested in seeing like how they define that because that seems really, really high, especially when you're looking at like an entire industry as a whole.
Mm-hmm.
You know, like I don't know. I would probably double check that to be honest. But let me see the rest of this. So many, yeah, and honestly, if we're not sure about this,
Then no.
it's probably not really needed because it's like a almost seems like a just random factoid that we threw in there. I don't know like how relevant it is to the actual trend that you're talking about. But anyway, let me see. So many businesses realized the importance of tech throughout the pandemic, which led to an increase in demand for tech innovation and consolidation. This is important as large companies begin to move more and more into the sector. Many who don't will fall behind. Tech will / has allowed many industries to broaden their scope and gain access into new markets and increasingly try to reduce the risk of economic downturns such as those caused by the pandemic. Tech has allowed many industries to broaden their scope and gain access into new markets. I'm not really sure what this sentence means, to be honest. What are you trying to say? So tech has allowed many industries to broaden their scope and gain access into new markets and increasingly try to reduce the risk of economic downturns such as those caused by the pandemic. Okay. I think the tech industry has great potential into the future. I think this will not only shape the direction of markets and customer preference, but also the job market. Demand for tech-related jobs will only continue to increase, and demand for tech-related majors such as comp sci and data analytics will only continue to grow. I don't know. This answer to me feels a little bit disjointed. Like, I know we have this framework here. Is like, what is the trend? Why is it happening? Who will care about it? And like, what is your opinion about it? But I feel like the four, how should I say this? It doesn't all seem like the four parts are all related to each other. Like you start by talking about M&A, like how, okay, there's tech is driving the majority of the M&A deals that's happening. And then I guess this is why. This is the why. Trying to think. Maybe the real issue is like, this isn't, maybe it's the trend itself. Like, I feel like this is, so what this question is getting at is more like, it's more like showing like something about a certain industry. In this case, you pick tech, right? So like saying a lot of M&A deals is happening, like I feel like that's more of a
trend.
It's not about the tech industry. It's not like a tech trend. Does that make sense? It's almost more like what's happening in the M&A sector overall. So like an example of a tech trend might be like um, let's say like SaaS, like software as a service, right? Before, like initially when SaaS became a thing, a lot of SaaS companies started out as horizontal SaaS companies, which means like, like Salesforce.com is the most famous SaaS company, right? And they basically make software for like sales teams. But it's sales software across for like any industry, right? Whether you're whatever company or whatever industry your company is in, it can all they can all use Salesforce, right? Whereas now a lot of SaaS companies are trending more towards vertical SaaS, which is like they build their software for a very specific vertical, right? So for example, um, like my friend that I was hanging out with yesterday, like he started a SaaS company and they build software just for freight forwarders, right? And it's very specific. Or like someone else, like, they build software for trucking companies. Like, so it's like for a very specific vertical. And obviously when they do that, the addressable market is a lot smaller because they can't go after every single industry. But the benefit is that they can build like very specific products or like very specific features for the needs of that industry, because every industry has different needs, right? So like, for example, that would be that I just like that's just off the top of my head, like that would be like a tech trend, right? Or you could say like, um I don't know, like if you want to talk about like the pandemic and
So even like e-commerce, is that too broad? Like the expansion of e-commerce?
just like basically people shifting from buying in brick and mortar to shopping online.
Yeah.
Um, that can be a trend, but I also think that that trend is like it's been happening for a while and it's kind of like a little bit too obvious,
Yeah.
you know? So it's like ideally you pick a trend that's a little
Yeah.
less
You
like
seem more knowledgeable, I guess. Yeah.
yeah. So um
Okay.
I think like if you just like usually when you research this question, like you could just Google like 2021 technology trends or something, right?
Yeah.
Or if you want to talk about like the impact that the pandemic has had on tech, then maybe it's something about, I don't know, like remote work and how a lot of companies started allowing remote work during the pandemic, and then now that even after the pandemic is uh, we have vaccines now and it's starting to get better, like a lot of companies are still keeping it just fully remote, or they're allowing their employees to continue to work remote if they want to, right? Like, I mean, at
Yeah.
least a lot of tech companies are. And so maybe like tying that back somehow, like, I don't know, like that's probably good for um, certain tech companies like, Zoom obviously did very well during the pandemic, but like there's other companies like, Slack and even Microsoft, right? They have Microsoft Teams, like all the tools that allow people to work together while not being in the same place, like they're probably going to benefit from this trend, right? Which is
Yeah.
probably here to stay. I don't know. That's just like another example off the top of
Yeah.
my head, but you get the gist though, right?
Yeah. For sure.
Yeah.
Yeah. Okay. No, I mean, yeah, I'm glad. That's why you give the feedback.
Yeah.
Okay.
Okay,
Okay.
cool.
Oh, and then I think just like, well, so if you were like an interviewer, for example, so specifically like when you do this kind of research, it's possible too that the interviewer will ask you a lot more about the industry, right? So I'm thinking like you have to do a lot of research, right, to back up everything you say,
um,
or
yeah, I mean, they can certainly ask you follow-up questions about whatever trend it is that you tell them. So,
okay.
yeah, you do want to be prepared.
Yeah.
And, you know, like I think really what you're saying is like you're probably gonna do more research than just what you put in your
Question.
initial answer, right? Like you probably won't, you don't have to say everything all at once because also like you don't want to answer be too long. But if you actually withhold some of the stuff, then like when they ask you follow-up questions, you actually have more stuff to say.
Yeah. 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 And I'm sure that helps with confidence too, rather than like, oh, I hope he doesn't ask me. I hope he doesn't ask me. Yeah.
Yeah, I mean that's generally not a good
Yeah.
so.
Yeah.
Okay, cool. So let's keep going. Tell me about a deal in the same industry that you've been following. What's interesting about it? One of the biggest M&A deals has surged this year. What do you mean by surged?
Because I did all of it and then I don't know, but I think it hasn't there's like a lot of now like government intervention with it. So then I think I like just put surge just because I think it didn't officially close. I thought it had.
Mm, well, regardless of whether it's closed or
Yeah.
not, like surge just is a weird usage in this context, I feel
Yeah.
like surge sounds like I don't know, their stock price has been surging or something, you know, like
Okay.
um I would just say one of the biggest M&A deals that has happened
Okay.
this year. It's Amazon's acquisition of MGM for $8.5 billion. They're Amazon's second biggest acquisition following Whole Foods in 2017. Okay. As media companies such as Netflix and Disney have continued to grow, Amazon wanted to expand its cinematic presence and become a strong competitor. Amazon had previously tried launching Amazon Studios a decade ago, but failed to develop its own movies and shows. The deal had an equity value of $6.5 billion and with debt with a total of $8.45 billion, 37 times projected EBITDA. 37 times. What was the? Hold on. Track changes. Which comes out to 37 times EBITDA multiple. Many other companies such as Apple and Comcast had valued it at about $6 billion. However, Amazon claimed that the reason for the higher valuation was from all the plans to create new content using MGM's stable of intellectual property. So how do we know this? Like they actually reported this?
Yeah, well, they had thought about acquiring MGM and they valued it at that about like a year or two ago.
Oh, it was a year or two before Amazon.
Yeah.
Okay. I would say several, not many. There aren't that many companies that can afford this type of acquisition. Right? So several other companies, including have valued MGM about $6 billion. Just a year or two ago. Because this sounds like they valued it. If you don't clarify, this sounds like they valued it at $6 billion this time, and then Amazon decided to pay, you know.
Okay.
And also, is this 6 billion enterprise value or market cap? Do you know?
I think enterprise value, but I'll just go back and check, of course.
Okay, so you're comparing this. So the apples to apples comparison here is 6 versus 8.45.
Mm-hmm.
Okay, so 8.45, 37x. So their EBITDA is about $228 million. Is that right? MGM's
That's what the, yeah, I guess so. But I should definitely make sure the numbers check.
Yeah, I will confirm that.
Okay.
Um, However, Amazon claimed the reason for the high valuation was from all the plans to create new content using MGM stable of intellectual property. Okay. Like people ask them why they paid so much. Is that what you're saying?
Yeah, well, there's been a lot of debate about why they paid, a lot of people think it was overvalued. But yeah. And then like I go on to it, I think, into my opinion of like why it isn't
Okay.
overvalued from what I researched.
The acquisition is likely to help Amazon attract even more Prime subscribers as a Prime Video service competes with the likes of Netflix and Disney Plus. Other companies such as AT&T have also recently tried to become part of the media business. Warner Media merged with Discovery at $43 billion to create the world's second largest media firm by revenue outside Disney. Okay. Has also recently tried to, I wouldn't say become part of the media, I would say other companies such as AT&T have also recently tried to enter into, okay. I recently tried to enter into the media business. Okay. Warner Media is owned by AT&T.
Yes, I think.
Okay. So we'll just make that clear, because otherwise it sounds like different companies.
Yeah.
Warner Media merged with Discovery for $43 billion to create
Yeah.
the second largest media. Okay. Even though Amazon is already in the cinematic industry, I don't think this is too far off their radar of interest. Too far off their radar of interest. I would probably just, I don't know, that sounds kind of weird. I would just say, I think this was a very logical acquisition for them. They have also had success merging with companies such as Whole Foods because of their ability to respect their target company's values, which is a concern back when they first acquired Whole Foods. From this, let's come back to this. I think we need to tweak that sentence. From this, I think a lot of the skepticism on Amazon and GM not having the same culture won't be a problem. MGM has had trouble for years, starting in 2010 when it almost filed for bankruptcy. As it has searched for a new strategy, Amazon offers them a new start and a lot of financial support that they will need to grow. I think this is a smart acquisition for Amazon as they spent $11 billion last year and $7 billion the year before in the video sector. This kind of really helped them take advantage and make a bigger name for themselves. Allowing Amazon Prime members to have exclusive access to MGM's films could be very profitable, as this was for Disney when they pulled out of Netflix and became, Disney pulled out of Netflix and became independent as, what does this mean?
As Disney Plus.
But what do you mean by they pulled out of Netflix?
Like they took out a lot of their movies, their Disney movies, and they became a separate.
Oh, they pulled their content.
Yeah.
And became independent. Okay, so furthermore, the video streaming market is set to quadruple between 2020 and 2028, hitting $224 billion. Okay, again, there's a lot of good thoughts here, but I think we need to organize it better to make it flow more. So,
something that also came up with like a lot of these things, especially with going with numbers. I'm guessing the more you stick to one article, the better, I guess, because like all of like the numbers might match. But it's just like sometimes between different articles, numbers are slightly different.
Yeah.
So what do you recommend for that? Is that something like do you know what I mean? Because a lot of them, especially like, so, I mean, I don't know specifically, like, I mean, a lot of them will like show graphs and like support their content, but they don't necessarily have they don't get to those numbers the same way, I guess. And sometimes they're slightly bit off. So I don't know, like when
I would need to see like a specific example of like what numbers you're comparing.
okay,
It's hard for me to comment just by hearing your description right now because I don't know. Like it could be that, yeah, I don't know. There could be different reasons for that. Like
okay.
depending on what the number is, right? Like so like
I
do you,
guess
yeah.
my question is like when you go into like researching these things, it's fine to go through a variety of sources, or is it better to have fewer and just more direct content?
It's fine to go through multiple sources, but yeah, again, like if you're gonna quote a number, it depends, right? Like if it's, yeah, if it's like if the numbers are similar enough, then maybe it's not a huge deal, depending on what the number is. But I think if you're not sure, you can send me like the different articles that you're looking at in Slack, and then just ask me what I think. I think that's probably like easier, because otherwise it's hard for me to. I don't know. So I feel like I'm not really answering your question right now, but I really don't know because I don't know what
Yeah.
you know.
Mhm.
Does that make sense?
Yeah.
Like,
Yeah.
are you like looking? Are they giving like different deal values or
No, that I checked those three different ones. I mean, even like so some of them said like 8.45, some of them said like 8.5.
That's fine. That's just
That's
rounding,
fine. Yeah.
right?
Okay.
Yeah.
Yeah. But I think maybe something I had, or like also just when you help other students, so like especially like with deals like this, it's just like sometimes not to have an idea of like how big these kinds of things are, how big these kinds of like deals are, or how big like they are in the industry. Um, I don't know if that makes sense. Just
Was
to like,
was that a question or I'm not
no, I'm
not
trying to
actually
I'm trying
sure.
to formulate my question.
Yeah.
I think it's just like, especially like for these questions, where some of them like I know I put in numbers because you always talk about how like it's better to put in numbers, of course, like if you can justify the number, but as they
Are you
spent.
saying like having an opinion on whether a 37x multiple is a lot or not that much?
Yeah, things like that. That's just more like research based.
Yeah, so I think like if you should try to have an opinion on, whether they overpaid or underpaid, right? But usually the way you would do that is you have to look at like other similar deals that have been done,
Mhm.
so like precedent transactions, for
Yeah.
example, or other like trading comps. So like I don't know who MGM trading comp is, but there's probably other like
Mhm.
companies that are similar to MGM that are publicly traded stocks. And then you can see like, okay, what is their current enterprise value? What is their current EBITDA and what is their EBITDA multiple, right?
Yeah.
Like if everyone else is only trading at, I don't know, 20 times EBITDA and then like Amazon paid 37 times, then that seems a bit excessive, right? Now, it's not like just purely looking at comps. So like, of course, you can still argue that first of all, Amazon paid more. Like usually in an acquisition, you're going to pay a premium because
Mhm.
if you're not paying a premium, there's no reason for the target company to actually sell themselves to you, right? And so that's the control premium. But then also, secondly, like you can talk about synergies, which you kind of like, I think we're kind of trying to do, but
Mhm.
you just didn't use the word synergy. So you can say like when you talked about how Amazon spent $11 billion and $7 billion years the year before, is this the
Mhm.
Amazon Studios thing or I don't know? Actually, you said that was a decade ago, so maybe not. But like when you say they spent $18 billion in the video sector, like
Mhm.
I'm not really sure what that means. Is that like are they buying content? Are they buying rights to the content for Amazon Prime Video or like what is it?
Okay. That's I didn't honestly know that either. I put it in. That was like one of the justifications that it found itself, but I also questioned that. I wasn't sure if that was like for advertising, for like the videos themselves that they're doing. Um, but
If I had to guess, it would be that um it would be that they paid that for the rights to the content rights, have the content on Amazon Prime.
Yeah.
Right. But I think like really like this whole thing, like your point, the point that I think you're trying to make, um, and even here, the who cares, um, is that whether it's Netflix or Disney with Disney Plus or Amazon, Amazon Prime Video, for these types of companies, it comes down to who has the best content, right? Like people are gonna go to, people are gonna pay for the service with the best shows and the best movies and whatever, right? That's why like content is valuable. That's why Disney pulled all of their content and then like formed their own Netflix competitor. Netflix also spends, I don't know, like tens of billions of dollars every year probably on buying content for their platform. Like you can find that information just with like a quick Google search, or like, it's in their financial statements, is in their SEC filings. So you can talk about how like to win in this industry, it really just comes down to content, right? And so that's why like, and you can say like, I don't know, content prices keep going up. And so even though this seems expensive today, in the future, it'll probably more than pay for itself. Or you can talk about, I don't know, like if Amazon already has like maybe MGM gets folded into Amazon Prime Video, and there's cost synergies, right? There's cost synergies because there's some redundancies and they can cut costs, and the 220 whatever we calculated earlier, the implied EBITDA of like $228 million could actually be could actually be a lot higher once you factor in like all the costs all the costs that you're going to cut out, right? For example, like that's kind of like the direction that I think I would go in. Like I think this is a good deal to talk about. And I think a lot of the points that you make are solid, but like the biggest thing is like the opinion section. I think we just like probably want to be a bit more organized, because right now it seems like you're just taking a lot of different ideas and just kind of like slapping them together.
Yeah.
Right.
Yeah.
Versus like you don't even necessarily have to do that. You don't have to have all these different talking points. You can really just have like one and go deep on that, right?
Yeah. I think I just didn't know how to go about it. So I was like, maybe you'll give me feedback on like what makes the most sense. So I just kind of threw everything there, which I kind of do with the pitch deals as well, by the way. But
okay.
Yeah.
So I think if we try to like organize this a little bit better, so it's a very logical acquisition for them. And then we can say like, we can talk about the reasons why you think it's good first, and then address kind of like what the detractors are saying, right? So, for example, this is more addressing what the detractors are saying. Let's see. This is more from MGM's standpoint. Let's just break this up real quick. So we can start from the macro level, right? So we'll say, I'll lead with this. I think it's a very large acquisition for them. First and foremost, the video streaming market is set to quadruple between 2020 and 2028, hitting $224 billion. And so So it can add a lot of growth for Amazon, even at their current scale, right? Because they're already so big, it's hard to grow when you're so big, right? And then let's talk about it from Amazon's standpoint first. And then we can say, given, we already said it's logical, so we don't have to repeat this here. So given Amazon has already spent upwards of $18 billion to purchase video content in the last couple of years. Have them take advantage and make a bigger name for themselves. I don't really know what that means. It's kind of vague. Like, take advantage of what, you know? So I might take that as a given. Amazon, it's already spent upwards of $18 billion to purchase video content in the last couple of years. This is really just a continuation of that. And gives Amazon more exclusive content through MGM's films so that they can compete with companies or other services like Netflix and Disney Plus, something like that. Or actually, things are really logical. First and foremost, the video streaming market is set to quadruple between 2020 and 2028, paying $224 billion. So it can add a lot of growth for Amazon, even at their current scale. But to win in this market, it comes down to, but in order to win in this market, it comes down to who has access to the best content, because that's what is going to attract subscribers, right? This is why Disney pulled all of its content off of Netflix and started Disney Plus. I don't know when they did this. Was it like last year or something?
I think so. Maybe 2 years ago.
Yeah, so you can check that.
Yep.
Given Amazon, it's also has spent upwards of $18 billion to purchase video content in the last couple of years in order to keep up. And this is really just continuation of that. Using more exclusive content to MGM's films so that they can compete. We don't have to say Netflix and Disney Plus again, because we already kind of said it here. Remain competitive in this space. And then we can talk about MGM, right? From MGM's standpoint, this selling to Amazon also makes sense. MGM has had trouble for years, starting in 2010 when it almost filed for bankruptcy. Has a search for a new strategy. Amazon offers them a new start and a lot of the financial support that they would need to grow. There is also likely there's also likely I want to talk about synergies. There's also cost synergies and possibly even revenue synergies that can be extracted from a deal like this. Two large businesses combine and there's a cost synergies and possibly even revenue synergies that can be extracted. Actually, I'm not sure about revenue synergies. There might be, but I just don't know enough about it. Um,
Okay.
so let's just
Okay.
sorry.
I said I can look into it to talk
Yeah.
about synergies. Okay.
There's also cost synergies that can be extracted from a deal like this when two large units combined and maybe redundant costs, which would make MGM which would make the which would bring down the effective multiple paid. Well, what I'm saying is like, if their EBITDA increases because of the synergies, then instead of saying they paid 37 times EBITDA, that multiple probably comes down because now their EBITDA is higher.
Mm-hmm.
Does that make sense?
Yeah.
Some detractors would argue that I think this is the risk, right? Then lastly we addressed the risk. So some detractors will argue that Amazon and MGM have very different cultures, and integrating MGM into will be difficult, but Amazon has shown through its Whole Foods acquisition that but this was also a concern when Amazon acquired Whole Foods, and I think they have shown that they are able to respect target companies' values and essentially keep it running as a standalone business.
Okay.
Let's see how that reads. One of the biggest M&A deals that's happened this year. So I'm using all the same points that you use. I just reordered it so that it flows better, right? One of the biggest M&A deals that's happened this year is the Amazon acquisition of MGM for $8.5 billion. They're Amazon's second biggest acquisition following Whole Foods in 2017. As media companies such as Netflix and Disney continue to grow, Amazon wanted to expand its cinematic presence, become a strong competitor. Amazon previously tried launching Amazon Studios a decade ago, but failed to develop its own hit movies and shows. You had an equity value of $6.5 billion and debt was and with debt was a total of 8.45 billion. Let's just say an enterprise value of $8.5 billion, which comes out to a 37-time EBITDA multiple. Several other companies, including Apple and Comcast, have valued MGM at about $6 billion just a year or two ago. Which has caused some to say that Amazon overpaid. However, Amazon claimed that the reason for the higher valuation was from all the plans to create new content using engineering stable intellectual property. Claimed, which it has stated. The acquisition is likely to help Amazon attract even more Prime subscribers, because its Prime Video service competes with the likes of Netflix and Disney Plus. Other companies such as AT&T have also recently tried to enter into the media business when its Warner Media merged with Discovery at $42 billion $43 billion to create the world's second largest media firm by revenue outside of Disney. Amazon is already in the cinematic industry. Is this the right word? Given that Amazon, let's just say,
Media.
has already made large investments in this space, I think this is a very logical acquisition for them. First and foremost, video streaming market is set to quadruple in 2020, 2028, hitting $224 billion. And so it can add a lot of, it can still add a lot of growth for Amazon, even at their current scale. But in order to win in this market, it comes down to who has access to the best content. And that's what's going to, because that's what's going to attract subscribers. This is why Disney pulled all of his content off of Netflix and started Disney Plus last year. It's also why Amazon spent upwards of $18 billion to purchase video content in the last couple of years in order to keep up. And this is really just a continuation of that and gives Amazon more exclusive content through MGM's films so that they can remain competitive in this space. From MGM's standpoint, selling to Amazon also makes sense. MGM has had trouble for years, starting in 2010 when it almost filed for bankruptcy. As it has searched for a new strategy, Amazon offers them a new start and a lot of financial support that they would need to grow. There's also cost synergies that can be extracted from a deal like this when two large businesses combine and remove the redundant costs, which would bring down the effective multiple. Which would further bring down the effective multiple. Some detractors will argue that Amazon and MGM have very different cultures and that integrating MGM will be difficult, but this is also a concern for Amazon acquire Whole Foods. And I think they have shown that they're able to respect their target company's values and essentially keep it running almost as a standalone business. Okay. And then lastly, we can probably say, last but not least, given Amazon's strong balance sheet, this was a deal that Amazon could easily afford. Both sides. Something like that.
Yeah. Yeah, that's a lot better for sure.
Cool.
Yeah.
All right. Let's look at your pitch. Pitch me 2 stocks you like. Stock 1. Lululemon, I think a company that is currently doing very well in the market is Lululemon Athletica. Reason 1, for starters, the sports apparel market in the US is valued at 105.1 billion.
Billion, yeah.
I don't know it's valued at, but it's just like, is this what it is today?
Yeah.
Okay. Is we don't need the 0.1. It's too like, yeah, but approximate is fine. The sports apparel market in the US is $105 billion today and is expected to grow to $354 billion by 2026. Holy crap, really? It's gonna triple? So it's gonna triple in like 5 years.
That's what the article said.
Okay.
Like, I'm not pulling these numbers off of like random.
Yeah, sure. So it's a which is a CAGR of almost 30%. All right. This is greatly due to the large increase in fitness conscious consumers who have adapted sportswear into their day-to-day lives. Largely, not greatly. This is largely due to the large increase, let's say significant increase in fitness conscious consumers. Okay. Lululemon is one of, they're pretty much a market leader, right? Considered market leader in this space and stands to benefit from this growth the most. Okay, so that's reason one. Then reason two, Lululemon has grown in the past decade largely due to its close culture with their customers. Close culture? No, that's kind of a weird adjective. What are you trying to say here?
Okay. I guess they're like direct their direct like attention to customers.
Direct attention to customer. I'm still not.
Like they keep like their business very like to a specific like kind of customer base, and then I say like they have little advertising. Well, okay, yeah. So
I guess
they go directly
let me
to
read
like
the
their
rest of
customers' needs. Okay.
let me read the rest of your reason. Maybe I'll understand what you're trying to say. So, for example, they focus very little on advertising and respond to how customers interact with their products in the stores. They have also successfully broken into the athleisure movement from their high quality brand that pushes consumers to not only wear their clothes for sports but also in their normal day to day. Finally, they are not wasteful, and by making their inventory so scarce, they're able to sell 95% of their inventory. Let me read your third reason. Lululemon Athletica's operating margin is 19.62%, which ranks better than 94% of companies in the industry, retail, and cyclical. Is this from an article you read?
Yeah.
Okay. Let's just say in the retail industry. There are a lot of skeptics surrounding Lululemon Is Overvalued from the pandemic's help in boosting their sales. Surrounding overvalue? What do you mean Lululemon's that they are overvalued currently?
Yeah. That's what a lot of the articles said, that they think it's overvalued.
Okay, so I would say I think this point around margin profitability is more related to your second point. So you like your second point, I think we should tweak this to say like they're very efficient with their cost structure. I think is what you're trying to say. At least that was my takeaway from it. So say like Lululemon has grown in the past decade largely due to its um can I say like due to its ability to create almost a cult like following. Um, customers are very loyal. As a result, they are able to spend very little on advertising and customer acquisition. They have also successfully broken into the athleisure movement. This feels like more like a argument about their growth, which I think we touch on in reason 3. So I'm gonna move this down. We'll come back to that. But for the second reason, let's just like, so first point is like the size of the market, right? It's a great market. Second reason is like they're more profitable than other companies because one, they can spend less on advertising and acquiring customers. And then their inventory management is also top notch. As they sell 95% of their inventory. Is this like every year or for the last year or I don't know.
I'll check.
Okay.
I'll check. I can't say.
I just said it historically sold 95% of their inventory. I don't know, sold or sold out. Sold 95% of their inventory. Due to these reasons, Lululemon's operating margin is 19.62%. We'll just call that 20%. It's 20%, which ranks better than 94% of the companies in the retail industry. Okay. This is probably more of a, I would probably move this down to risk, right? Like another risk is like people think it's overvalued maybe, right? But here I'll just focus on the positive. So last but not least, Lululemon has just started to expand into men's clothing and apparel and has yet to see the momentum. Which provides them with another huge growth opportunity that is still currently untapped. Although some people think um, I guess you already talked about the valuation here. So although some people think Lululemon is overvalued, trading at about 10 times trailing revenue compared to 6 times from just 6 times from Nike. Lululemon's top line grew 61% year over year. In its recent quarter, compared to just 16% for Nike. Obviously, that's because Nike is much bigger, right? Nike's like 1.2 billion versus 1.5 is almost like 10x bigger.
Yeah.
We don't have to mention that because compared to 16% for Nike, and in the current market environment, investors are willing to pay for that. Actually, I can incorporate this here. Last but not least, Lululemon has also successfully broken the athleisure movement in their high quality brand that pushes consumers to not only wear their clothes for sports, but also in their normal day-to-day lives. Additionally, so both of these are like different growth opportunities for them, right? One is going to the athleisure market. The other one is expanding into the men's market, right?
Mhm.
So this whole point is about growth, right? Is likely sustainable, and in the current market environment, investors willing to pay for that growth. Okay. I think the number one risk is Lululemon's niche-based products. Most of its market is aimed at women's wear, whereas other companies such as Nike have an expansive range of products for all genders and ages. Lululemon may risk finding further growth if it does not also expand its product based on more audiences. But then this is kind of like contrary to what we're saying up here, right?
Yeah.
Because pandemic, let me see. So mitigating factors. Because the pandemic pushed sales so high from individuals trying to increase physical activity from home. This could lead Lululemon to believe they can continue to grow sales going forward, but I think they need to do something different to keep them up post-pandemic. E-commerce is, for example, comprised 52% of total revenue in fiscal 2020. So mitigating factor is supposed to like address whatever risk factor you bring up here. Does that make sense? So this seems like you're just bringing up another risk factor. So either, and I think this also goes contrary to what we set up here, because we're saying like, you know, they're going into men's and they're going into these other markets, right? So one way you could tweak this is you can say, obviously, as Lululemon expands into these new markets, there's always a risk that they might not be as successful in the men's market as they have been in the women's market.
Okay. Yeah.
Right. That could be the risk.
Mm.
But then like if you use that as a risk, you need to have like a counter or like a mitigating factor, which is like, however, I don't think this is a huge
Okay.
concern
Yeah.
because I don't know, because they've been able to expand into different markets successfully before, as seen through XYZ examples. Or if you want to use the pandemic thing as the risk, then you can just replace this and say, one potential risk is that Lululemon got a big boost during the pandemic from all these people trying to increase their physical activity from home. So
Mhm.
as the pandemic goes away, it remains to be seen if their sales will come back down.
Mhm.
And then like if you do that, then the mitigating factor for that would be, however, I don't think this is a huge concern because again, they're already expanding into all these different markets, which should help sustain that growth, like something along those lines,
Yeah.
right? And then like this seemed kind of random to me, like I wasn't sure why you included this factoid in here, like 52%.
Mhm.
Like it didn't really seem to have anything to do with what you were saying here. Does that
Okay.
does that make sense?
Yeah. Okay. Well, I guess I was saying like that boosted their sales, that it was like e-commerce based
Um,
for the pandemic, but yeah. Okay.
so what was it before? If it's 52%,
Okay. So yeah, a comparison.
I would just make that more clear, right?
Yeah.
Like
Okay.
if it was only 20% before and now it's 52%, and then like when pandemic goes away, like is that gonna go
Mhm.
away or does that just go back to in store? Like, you know,
Mhm.
probably
Okay.
be 52% because people are afraid of going out and they don't want
Yeah.
to shop in store, right? But that might not necessarily be a bad thing. It's like
Mhm.
these companies, like they want to grow their e-commerce channel, right? If more of their sales shifts to online, that actually saves them money because they don't have
Mhm.
to have like all these physical locations, right? Make sense?
Yeah.
Okay. So I would like
Pick. Okay.
rework this part. Rent the runway.
This one's not very like numbers based.
Consciousness toward buying more eco-friendly buying habits continues to expand. There has been a growing demand for system. Are they public?
Yeah, they just went public like less than a week, like no, like October 21st.
Okay. Rent the runway is a company that provides design dresses, clothing, accessory rentals, services through stores and online to reproduce fast fashion concerning around customer event and we use clothing apparel rather than continue to increase the increase of extreme clothing consumption. It was the first ever IPO with a female CEO, CFO, and COO. One issue could be lack of marketing. Spend less than 10% of his total revenue on marketing. Being a relatively new company, we struggled throughout the pandemic, finding as many consumers were not willing to spend as much in fashion while staying indoors because 8% of transactions in the fashion industry happen in in-person stores. Industry itself plummeted by 34% in that month. The start of the pandemic, data must really, it's probably a typo. They must really focus on their success around the e-commerce model, make sure it stays as efficient as possible. Yeah. So again, I think like you misunderstood what mitigating factors are, right? And so that's like addressing the risk that you brought up. But
Yeah.
in general, yeah, like I think your Lululemon pitch is way stronger. Like
Yeah.
these aren't really like super strong reasons for someone to buy a stock.
Mhm.
Like it's just okay, yeah, it's nice, they're eco-friendly, and then like so what? Like what?
Yeah.
Why do you think the
There's no
stock needs
numbers
to go
behind
up?
it. Yeah.
Right?
Also, Chinny, right? It's better to have like a company that has more numbers to show.
Mm-hmm.
Yeah.
So
Yeah.
I would probably just like
Yeah.
pick a new example instead of
Yeah.
random way. But I mean, in most instances, if your first stock pitch is good enough, you most likely won't need a second one. But I just
Mhm.
have you guys prepared too because sometimes I have
Yeah.
some people ask for two. So this is
Yeah.
not like
Yeah.
it's a nice to have, I guess. Let's put it that way.
Mm.
Okay. Let's look at the last one. So what questions? Okay, this one should be easy. So about the interviewer. Oh, this is nothing. Right? This is just Are these examples that we gave you? I don't remember.
No.
Okay. How has your background in X helped you throughout your career so far? Have you dealt with high pressure or stress at your job? I don't like this question.
Okay.
It makes it seem like you're worried about how stressful the job is or whatever.
Okay.
You know. How is an analyst performance measured? What are qualities you think makes an
That was
analyst more
generally.
successful than others? Or just that second part is fine. How long do you normally get to work on a deal?
How long do analysts normally? Is this an okay question? I don't know about
It
this.
doesn't really make
Well,
sense. Yeah, it doesn't really make sense. I don't know what that means. Like how
like
long?
I meant to expand it with the next one.
Do analysts usually get to see the whole deal through or move on to different ones in a short period? No, you'll usually see the whole deal through.
Okay.
I don't think this is a great question, but
Okay.
I would say, um,
Okay. Well, I know there's like a ton of examples of different.
yeah, we'll probably need to think
Yeah.
of a different one here.
Yeah. Okay.
Okay. Any questions?
No, just concern. Just concern, but definitely all the feedback is really helping.
Concern
Yeah.
in terms of like,
I just concerned and like clearly like I just need more like practice in knowing how to like structure my sentences and like my deals just because I don't, of course, like it's very competitive and um so yeah, just concerned and like thinking that maybe I knew how to answer them, but now having your feedback just going forward. I don't know, would you recommend just like going through like being able to go through different deals and like I guess definitely like read more news articles and seeing how people talk about them? I was trying to watch like videos of like stock pitch competitions to see how people like actually talk about deals. But yeah, it's concerned. I think I'm just concerned, but I'll definitely work on that coming forward.
yeah, I think you're fine. I think, these questions inherently are tricky, especially like when it's the first time you're doing it and most people aren't very good at it. So like you're not alone in feeling the way you feel when it comes to answering these questions, but that's why we're working on it, right? And like now that you've seen me go through them and show you my thought process, like um hopefully you're starting to get the hang of it. But like you also don't need to know a bunch of different deals. Like you just need to know one or two deals really, really well and be able to talk, be able to deliver that answer well. And I think you're pretty close to getting there. You just have to rework some of these things based on what we talked about, right?
Yeah.
So,
Okay.
and then once you reworked it, like we can take another look at it or whatever.
Okay. Yeah, I just there were like, I've been looking at different like behavioral questions to kind of just think about like how I can reward them. There were two specific ones that I just wanted like so there's one that's like name a global event which you think would change financial markets. I don't know, like of course like Evergrande is something big that has happened recently. Is that something that maybe like it was just general, like I'll go into it and I'll practice, but is that okay? Do you think? Yeah.
Evergrande is a valid
Yeah.
market event to talk about.
Okay.
I think even your inflation answer could
Okay.
work for that question too.
Yeah.
So it's
Yeah.
like you could just reuse that answer too if you want.
Okay.
The thing with Evergrande is like I haven't been following it close enough to know, but like I think the gist of it is like there's a lot of these real estate companies in China that have been cooking their books for
Yeah.
years, right? And you would think that would, I don't know, like I've read some people that are very pessimistic and basically think like
Like a financial
bring down
crisis.
the yeah,
Yeah.
it's gonna bring down the entire market, but then like so far it doesn't seem like that's happened and it's not a secret anymore. And so I don't know why the market didn't seem to care this time.
Yeah. Okay. And then the only other one, I wrote it here, which was, it was discuss a time when you've gathered relevant information and what did you do and how was it helpful? That was I don't know what that means. Like, would that be like a research project where you've gathered a lot of relevant information? I don't know what an interviewer would look for with that, or like maybe how you can put different like ideas together.
Can I repeat the question again?
It was discuss a time when you had to gather relevant information. What did you do, and what was the end result?
I think that could be like, I don't know, like anytime you worked on like a school project,
Yeah.
you had to research,
Okay.
you had to research something, or you did a case competition, or
Okay.
I think they just want to hear like your process, or like how you go about like tackling a new project
Okay.
without having all the information that you need, right? And then so
Okay.
like, you had to go out and find whatever information you actually needed. Yeah.
Yeah. Okay. Yeah. Thank you.
Does that make
Those were the
sense?
two. Yeah.
Okay.
Yeah. I just wanted to clarify.
Okay, cool. So I'll send you back this document, and then yeah, just let me know if you have any more questions.
Okay. I think I don't think you sent me the ones we did last time either.
Oh, I didn't?
No,
Okay, let me send that back to you too.
those two, please. Thank
Okay.
you.
Thank you for tuning in. If you enjoy the content, please subscribe to our channel or podcast so that you can get notified of all of our future episodes as well. If you'd like to apply to work with us so that we can help you in a similar way, feel free to reach out to our team at www.wallstreetmastermind.com/apply. The street is abbreviated to ST, so it's wallstmastermind.com/apply. Talk soon.